Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the little bit of a pullback on the Bitcoin chart. Of course, we did have a bit of a breakdown in the general structure, which we will go over. Hope you guys are having a great start to your week. Of course, this is a big week coming up. As you can see, stocks are actually doing fairly well today, at least in the beginning sessions here. And, all of this is in anticipation of the Federal Reserve's decision coming up on Wednesday. So please understand that on Wednesday at 2:30 p.m., that's Eastern Standard Time, Jerome Powell, the Federal Reserve Chairman, will be having a news conference about how the Fed is going to increase rates. And one thing that we should just get straight out of the way is that if it's over 50 basis points, the market's probably going to take a sizable hit. If it's 75 basis points, for example, probably going to see significant downside. If it's 50 basis points, then probably just neutral to sideways, which could still include some pullbacks because the stock market has been fairly bullish. So pulling back would be normal, but I wouldn't really expect a new low necessarily unless there's some other information that comes along with that. And some of that information could be bad CPI data. On Tuesday, tomorrow, we will get that CPI data. And if it is negative, then the markets could start to try to front run the Fed, and they may build in expectations that the Fed is just going to go harder for longer. And, it could actually imply a deeper low on the stock market, charts. And we are going to have to watch these moving parts. Of course, the weekend was fairly uneventful, but this week is a significant one. Today, we will be getting the New York Fed's inflation expectations, so just their projections for the 5 year, and we'll want to see this to see if it's about even or if it's under or over. If it's over, of course, that could be bad for markets. Now, guys, if we do look at the Fed targets, then we can see that the current target is 375 basis points, so we're in that 400 basis points range. The market expects there to be 50 basis points, so 75% of the market has priced in 50 basis points already. That's why I can be reasonably confident if it is 50 basis points that it's not likely to cause any collapse in the market. But only 25% have factored in 75 basis points as an increase. So if the Fed does increase by 75 basis points, basically 75% of the market is going to be fairly shocked, and that's why we could see significant downside in the stock market. If we do go over to the Bitcoin chart, we can see our support and resistances here, as well as my hell line thrown over the price action. And, we just see that we are still in that macro downtrend. So there is no reason necessarily to be bullish yet. Yes, we've had a little bit of a bounce, but what I'd like to point out is that, this pattern right here that we're seeing, in my estimation, that's very, 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 very similar to what we may have seen over here. And not only this kind of toppy formation, but also this, the what led into it essentially. And so we are seeing this kind of fractal play out time and time again, where we're getting these structures which then break down. And we do appear to be in one of them right now. Now, that doesn't mean that we are going to dump. I just wanted to point out that this is a pattern that we've seen come up multiple times on our way down in the market. And whenever people start to think that the market is pumping, it just ends up taking us one level lower. So you guys are going to have to understand that it is the safe bet to get into positions which could protect your your financial assets. Guys, let's just back up on those circles there. And let's go ahead and zoom in. If we do zoom in, then on a local level, you can see that we are struggling to get above that hell line that I've distinguished there. But whenever we do see a nice pump. So let's go ahead and just give this price action a little bit of a chance today. We do have some structure. That structure is going to be, let's go ahead and just take a look at the current patterns that we have going on. We did have this kind of rising parallel channel here, and the thing is that you do see that we had a breakdown, right? We had a breakdown underneath that channel, and so that's not good. That suggests that we may be starting to show signs of losing support in this momentum upwards. And, just because we are pumping right now, that could actually be considered a bearish retest of the breakdown. So what you might consider is that something like that could happen where, we've broken down and now we're retesting the breakdown to see if there's any energy left to get us back into the previous system, this previous range here. And if not, then probably we're just going to drop fairly sharply. Now, these pullbacks actually happened within the channel, and so for them, it was just support. But for us, where we are right now, we have to consider this a kind of diagonal resistance, right? So it is a bigger deal. Just this a slight, slight deviation of price here is a significant deal. However, if we are to take the optimistic view, we can see that we are just putting in higher lows. And if this is our high here, then we have also a higher high. And so if we are able to creep back into this system, this could essentially be a fake out and no harm and no foul. Now this broadening right angle wedge that we had here is starting to turn into what looks like a bit of a diamond pattern. So we do have to watch out for that as well. You can see the diamond forming here. And this diamond could have a continuation to the upside, so we could see one more push. But these things just as easily break down, so just to watch out for that. In the past, these little diamond formations that we've had have been breaking down in this local area. So I put that at 50-50, and I wouldn't really count that pattern too strongly there. I would just say that we do have a bit of a neutral look here, and if we just examine the microstructure above us, we have a little bit of a trend right there. So the two key numbers just based upon patterns, based upon kind of price action structure here that we're going to be looking for. At first, we're going to want to get over $17,050. Then, if we can make it up to this diagonal, we're gonna need to make it above 17,100 and let's say $90. And then, of course, we're going to have to defeat this diamond here, so we're going to want to see somewhere around $17,300 in order to push through this stuff structurally. I think for patterns, that's pretty much going to wrap it up, but we can zoom out a little bit and provide a little bit more context for what we're looking at if we do understand that we do have this this long-term basically a resistance zone over our head where let's just consider this a little bit of just excessiveness, a little bit of excessiveness. There is this zone ever since we've been at 70K where whenever we get into this area we do tend to get rejected. And so rejected, 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 right? Every time we enter this little zone here, and our price action is currently in that zone. So that does, bode, unfortunate, which is, if we're talking about the potential for breakdowns, this is the area where Bitcoin likes to break down to the next level lower. What could that level be? Well, we have some support, just some intermediary support around 15.5, around 1500, and around 15,500, 15,000, 14,000, and then of course around 13,000. If we do end up pushing lower with those measured moves off of these bear flags that we've just been forming, one bear flag after another, right? You can just see them in how they just get formed here. Bear flag, a bear flag, I mean, this is bearish, bear flag, right? And so the measured move down could take us into that 15 to $14,000 area if we're just following these local bear flags, which so far have had a 100% hit rate. Now I'm on the log scale right there, so I'm just going to take that off briefly. Because we are just looking at kind of parabolic action to the downside, and so that's why I was using, log scale for that. But let's see, what else could we take a look at here? Let's just go ahead and zoom back in. Of course, we're going to want to take a look at the good old alpha momentum pools. And what the alpha momentum pools are telling us is that we did recapture some daily momentum here after that breakdown from my 2 to 5 day projection. So when I last left you guys on the previous episode, we did have the daily momentum pool, which we were just swimming around in, kind of testing the top, but not really committed to it. And we did end up breaking down, which I suggested that, if we just kind of like hover there, it's not really using the momentum. And so there is a chance that we take a dip in the pool. We did take a dip into the pool. We just played around with the momentum for a couple days. Really nothing to talk about. Price action almost was non existent for the last couple days. And then just suddenly, of course, we broke down. And so, of course, I'm making a new episode today with today's momentum pool following that breakdown, which could have gone up or it could have gone down. We wouldn't really have known. This is just neutral inside of the pool, bullish on top, bearish below. Having broken down, we did want to see what it was going to do with the bottom of today's momentum pool. We are just swimming around again. The next 2 to 5 day projection does suggest, right along with our structural analysis, right, of a trend that we do need to get above 17,130 to have a chance of pumping here, and both the 2 and the 5 day charts agree with that. So that is an area that we do need to hold pretty strongly. And, just on a daily basis, we will recover our momentum if we get above that $17,030. Let's see, let's go ahead and put on some of the alpha momentum scales over here so we can get a little bit more nuance. And you can see that, let me take off the pools just so that we can see the price action a bit. You can see that we are going to be solidly bearish below 16,897. So basically, if we lose 16,900, we're going to lose the vast majority of our momentum, and probably we're going to be testing some lows. I think there's several areas that might be interesting to us. So, we can consider that maybe this kind of 16,500 zone might be interesting. Maybe this 15,900 area will be interesting. Maybe this 15,700-ish. And then, of course, all the way down to 15,300. Around 15,300, we are going to lose all of our momentum. And so if we do just happen to plunge all the way down to 15,300, there's still a chance that we could pick up. There's multiple points of interest on the way down. I'm not a fortune teller, so I can't tell which ones we're actually going to hit. Most of them correspond with the wicks and the little consolidation areas on the price action over here as points of interest. So just going along with our horizontal support and resistances, you can pretty much eyeball where we're likely to like slow down or have little bounces if we do end up, just having a micro capitulation to the downside. And my point being that our last point of momentum is around 15,300, where we could suggest that, we could fall down. I mean, who knows? I mean, it could be pretty catastrophic if we lose that on the day. Now, keep in mind, these are daily measurements, all right? So we will have to update by the time the Fed makes its decision. And if we do just look a little bit on the upside, well, we are going to, turn back to a bearish bias underneath 16,945. It wouldn't be critical. You can see we've already put in a local low here. And for the next 4 hours, well, actually, we have 25 minutes left in the 4 hour. As long as we're above 16,960, within 25 minutes of me basically making this video, and from the upload, it'll probably be about that time. If when you're seeing this video being uploaded, then as long as we're above 16,960, we've held our momentum for the 4 hour, and we can still, have some type of a hopium there. Our daily neutral is going to be around 17,045. So you can see we are underneath that number. And we really do need to get above 17,045 in order to have some type of potential for a pivot to the upside on the daily basis. And the 12-hour is a little bit even harder to achieve, because it's suggesting we need 17,110 for its pivot. But if we do get up in that area, we are going to have an overall daily bullish bias. Anything above 17,085 is going to start looking good. And, 17,128, I think, is the front runnable number for perhaps, significant. Pumpage to the upside. Now, normally you might want to take out some of these, these wicks up here, some of these candles up in this area before you were going to be solidly bullish. But because we'll have returned back to our structural channel, I can suggest that, just on a front running basis, me personally, if we do secure this channel again, I will just consider this some type of deviant fake out, and that we're probably going to pump up to the next level up there. So but ultimately we are still significantly far away from the area that we do need to hold if we are going to be macro bullish. Of course, I think I'm just going to, I usually adjust this on a day-to-day basis, but I think this area is essentially what we need to take out. So basically 19,000 to 20,000 is what we need to take out to start having any semblance of macro bullishness. And I'm just going to leave that hanging out up there. Not really important right now. We are fairly far away from there, but if we did get a pump because of the CPI data just being in our favor, or because the Fed takes a holiday or something like that, then we could easily reach those levels and maybe even go on a bit of a run. But for the time being, of course, I have given you my warnings about the danger zone that we're in terms of rejections on that log scale chart, and how we have this kind of toppy formation that even though it's significantly smaller and weaker than some of these other ones, it does, we do tend to have this pattern here. And so just from my perspective, risk is currently to the downside unless we get back into that channel and start seeing some 4-hour candles being put above, a 17,128. Guys, let's go ahead and take a look at our EMAs because they may just reveal something to us. I can get some simple EMAs on here just to take a look at our 4-hour really quickly. And you can see that we are below the 9 on the 4-hour, but we do have a little bit of a squeeze with the 4 and the 9 potentially coming up using the 89 as support here. So the 4-hour does have potential. You can see again, we are over its momentum limit here. It's a momentum pivot over here. And so we do have the potential for the 4-hour to carry us forward. Let's jump over to the 12-hour, see how the 12-hour looks. 12-hour is looking a little bit nastier, so that is why the 12-hour pivot is this high. It does want to reclaim the 9 EMA. And you can see that we are in danger of actually squeezing further to the downside on the 12-hour. So right now, I would say that the 12-hour chart is what's controlling us. The 12-hour will end in about 4.5 hours. So basically, right now, it's a battle between the 4-hour and the 12-hour, each operating on a 4-hour closing basis in order to try to see who's going to win this kind of pivot area. Is the 4-hour going to win, or is the 12-hour? And the daily is just stuck in between. So if we go to the daily, you can probably see some type of neutralish level. Yeah. So currently we're below the 9 and we're below the 21, which is not how you want to close. But look at this. Look at this pump right off of. It really rejected the bearish breakdown. So the day candle has already tested this bear zone, and now it's coming back up. This does free the daily candle to pump to the upside, and this whole wick just being a fake out, having already tested this zone. But to do so, it is going to have to close the day above that 9 EMA. Otherwise, just traders, EMA traders, and lots of different traders, including this pattern and whatnot, they're just going to see this as a daily breakdown underneath the 9. So really, we do need to close at that daily neutral pivot level, and preferably above that 12-hour pivot level, which you can see that on the daily that would actually end up in a positive squeeze between the 4 and the 9 EMA on the daily. So that's pretty much your perspective there on the EMAs. If we do get a little bit more complex EMAs going out here for the advanced users, we can take a look for some of the crossovers that we may have. And no, we're not really getting any significant crosses here on the daily. Let's go ahead and just see if something's on the 12-hour. Yeah, we do have a little bit of a, well, I mean, I guess that would be a bullish cross on the 12-hour. That could be what's actually bumping us down here between the 100 and the 89. I would not consider that significant, probably just completely ignorable. But let's go ahead and take a look at the 4-hour. The 4-hour, you can see that we are butting our head right against that 200 EMA. And so, if this is just a fake out to the downside, this is very interesting. See, this is why I like to get into the nuance of these EMAs. You can see that we do have the 200 4-hour SMA underneath here, just scooping us up, kind of being supportive, right? Supporting while it lifts, while this 200 EMA is just kind of blocking us from going forward. And so we do have essentially a broadening wedge being formed by the price action, following these 200 EMAs on the 4 hour. And it's another reason to consider that the 4 hour might actually be what's in control, and that this 200 EMA is just so hard to break that it may just need a couple goes, right? It may need a couple chances to kind of hang out there. And so one more push up there might be what actually ends up taking us to around 17,500 as the next stop there. However, the same logic can apply for the 200 SMA. Both of these are very significant, EMAs, pardon me, moving averages for traders. And so if the 12-hour does end up just pushing us down and we take out this low and we get into that solid daily bearish bias, then the 12-hour is going to start to attack the 4 hours 200 simple moving average, and that could break just like the top here. So you do see the structure that we're forming here based upon these EMAs on the 4 hours, and hopefully that means we can get a little bit of a pump, and this structure does look like it has a chance. I mean, it looks very similar to the structure over here. So there is a chance, guys. It's just right now a battle between the 12-hour and the 4-hour. They just have totally different setups. If we do go over to the 12-hour with our complex EMAs here, then you can see that yeah, we do have a structure. It just looks like the inversion of the 4-hour, right? And so of course there's a lot more weight that goes with the 12-hour, so there is a good chance that the 12-hour is going to win, especially having broken out of that channel. But guys, again, it's just like a stalemate between those two setups, and the deciding factor could end up being the CPI data, or perhaps the New York Fed's inflation expectations that should be coming out today. Okay, so today and tomorrow, very significant in terms of whether these shorter term kind of attempts to be bullish, or these midterm attempts to be bearish are going to win out. And the market seems just to be posing itself neutral in expectation of either direction, right? So traders just really undecided here, which you can see this is essentially a indecision wedge. We talked about the diamond pattern, but overall, whenever you get one of these triangles, one of these kind of like really neutral kind of triangles, it just means that the market just hasn't decided. And so they're just postponing their action. They're waiting for the price action just to come towards the point so that they can delay their decision making, right? And that's because, of course, people want more information. And if the New York Fed is going to be releasing information today, and the CPI data is coming out tomorrow, and the Federal Reserve is going to be coming, out with a decision the day after that, then you can understand what they're waiting for. Going to the daily, we can see that we did almost have a crossover here, a bearish cross, but we did narrowly avoid that. So that is interesting that the 89 did avoid that bearish crossing. Now, that could have had the potential to pull us up, actually, ironically, which is probably what this little pop was about. But until then, we're just basically hanging out sideways according to this structure here. We are in danger of losing the 21. We are underneath the 9, it would appear, on the daily. No, the 9 and the 21 are essentially in the same region, and yeah, we are a hair underneath it. So yeah, we really do have to pop up to that estimated daily neutral in order to avoid that. And going on some higher time frames, let's take a look at the 5-day. The 5-day, you can see there is a significant potential for an alpha 9 knockout up here. So even if we did pump up, This potential bullish crossing could give us a 5-day alpha 9 knockout, where in this case it really is the 9 EMA and the 10 EMA crossing over here. And these tend to be the most powerful knockouts, guys. So this could end up having us retest our low if these do cross bullishly. Now, the thing about that is that it would be a bullish cross. So you have to remember it's kind of like temporary pain for a little bit longer term gain. And guys, so if this market is just going to retest the lows and then continue to pop up, that would be also an interesting possibility to consider. Of course, we've seen stuff like this before, right? Let's see if I can find one on the 5-day. Yep, right here. So here you have an Alpha 9 knockout, and you can see that price action was kind of like what we're doing, just kind of scooping up, right? That's what we've essentially been doing. And then the 9 and the 10 came over here. They squeezed together bullishly, but where they squeezed together, where they started to pinch off, you can see that we had a nice drop in the chart. And if you look closely, you can see that this low was actually lower than this low over here. And so that is the kind of fake out that you can get with those alpha 9 knockouts before they cross bullishly, and then the bullish cross eventually pulls it all back up. And this is how these market makers and whatnot shake people out of the market. And so that's why I've coined the term alpha 9 knockout, because it is this move that I tend to look for, which is part of the market making game. And so what would that look like perhaps in this current setup? Well, if that similar type of pattern holds true here, you can see we're pulling up, right? But we have this alpha 9 knockout potentially on the 5-day. So we're starting to slow as we hit our head on that 9 EMA on the 5-day chart. And then if these do cross bullishly, you could end up seeing that fake out to the downside, which takes us, approximately to similar range lows. Maybe even making a lower low like we saw in the previous setup, and then ultimately, as long as we don't fall to hell, as long as it's only kind of a wick down here, then we could eventually be pulled back up. Now, the danger, of course, is that we lose all of our momentum and that we just continue to the downside. So, these market makers and whoever's, really leading the market in terms of pushing money around and, pushing data around, these guys know what they're doing when they skim that dangerously to different levels, and it's why almost every momentum level gets rechecked. Why every pivot gets rechecked. Why these trend breakdowns and breakups, they get retested all of the time, and it's just living dangerously on the edge there, right? If we look at the weekly, nothing notable to me on the weekly, except that we are above the 4 SMA. So again, like we really haven't completely lost our support yet on the weekly. If we are going to continue to pump, maybe something like this. If I was to do an analogy, and you might not be able to see the 4 SMA too easily, but let me just go ahead and increase its brightness there. Maybe make it a little bit darker. You can see that this pink line right here is just scooping underneath us, and it's still holding that support. So if I was to make an analogy, it would be sort of like we are right here. Okay, like that's what the analogy would be. We're somewhere right there on this chart. You can see there's a potential for an alpha 9 knockout on the weekly coming up in a while, just like we had one right here. And so we're being supported, but you see that eventually that knockout play takes us down and then pulls us back up. So I could see something like that happening not only on the 5-day, but also on the weekly, is suggesting that we could see something like that and then get pulled up, and then, perhaps have a limit somewhere around this resistance area, around 18,000, 18,200, max maybe this 19,500-ish area, right? And then we maybe have the capitulation to the downside. So There's a lot of variables involved here. I am doing a deep analysis of these EMAs just because I like to do that from time to time. And, we can see the story of the price action through the EMAs. So people who dismiss the EMAs, it just doesn't make sense. The EMAs are a great tool to be using to tell the story of Bitcoin's price action. Guys, let's go ahead and just take a look at volatility next because we really haven't talked about volatility in a while. And we were just kind of consolidating, so not much to say. But if we look at the 4 hour, you can see that we were pumping. And, of course, this did have us pump our price action essentially to the downside, right? We ended up pumping to the downside using this volatility play here, which is now pinching off. So you can see that it's starting to pinch off here, and that would suggest that, well, it could continue on its way, maybe do a little bit of a meander, and then we could continue to pump, basically break down, to the downside, essentially, even as this volatility pumps to the upside on the 4 hour. But this could also just close down and recontract, and we might find ourselves pulling ourselves back up. So we are going to have to see how this 4 hour ends up closing to make an evaluation. We're just not there yet. Volatility is direction neutral, so I really can't say anything about price action until we get a flip and I can see some type of a trend going with it. The only thing that I can tell you right now is that our little trend, our little 4 hour trend to the downside looks like it's coming to a close, and a new 4 hour volatility era is going to be popping up, which should have multiple 4 hour candles, either to the upside or to the downside. Let's take a look at the 12 hour, see what the 12 hour is doing. Okay, the 12 hour similarly is just kind of consolidating, just kind of just checking stuff out, and so we could have a volatility flip as the 12 hour comes to a close too. So, that does suggest that it is going to be a decisive moment. And for the day might have more at stake here. Yeah. So you can see that the day is really just on the ground. It's ready to just explode in one of two directions. And so the day is saying, hey guys, I'm just waiting for the 4 hour and the 12 hour to make up their mind in terms of their volatility, getting reset. Because we're talking about volatility here, we're not talking about momentum in any one direction. And then the daily is going to choose its direction, okay? And it is just going to explode. It's on the floor. These tends to be big moves. So a big move is likely to be incoming, and we are just waiting for those 4 hour and those, that 12 hour closure to kind of give us some type of a heads up on where the day might go. But so please do protect your assets because this could be to the downside. There are more indications suggesting to the downside right now, just suggesting that because of the breakdown of that channel. However, we are of course in a macro downtrend in a zone which does tend to get rejected to the downside. However, we are in a local kind of uptrend, and we haven't lost that yet, even if we've lost the channel. So this thing could have just been faking us out, and we could end up exploding to the upside. So you do have to understand that this is the risk that we are in at today, which of course is why I'm updating this video. Let's take a look at the 2 day to see if that volatility is carrying over. Yeah, it's carrying over. This thing isn't floored out, but it is approaching those levels. Let's take a look at the 5 day. 5 day is just expanding in its own way. It is expanding to the upside, so that's good. But this does look like it could pinch off at any time. So, if that was our move to the upside, then it could be over as it's approaching the middle of the chart here. But until it crosses over, I can't say it's done. So this is reserving the right to have a little bit more expansion to the upside. Let's see, for the in price action, in terms of the volatility on the weekly, same thing with the weekly. The weekly agrees with the 5-day, just leaving a little bit of hopium that it could continue to pump no matter what happens on the kind of 4-hour, 12-hour, or within a couple days. The 5-day and the weekly are leaving the door open for a little bit more pumpage, but you can see this is not the most convincing volatility play here. So overall, we are looking more towards the 4-hour, the 12-hour, and the daily for our volatility pushes, and that does go along with the other things we've reviewed today, which is price action, momentum, and of course the EMAs, and now the volatility. And just to remind you, on the week, we do have the potential for a squeeze all the way up to 17,700-ish, probably a limit around there, around 18,000-ish, where we do see the 300 simple moving average just coming in overhead. So bumping our head on that $18,200 area would be likely. It would be likely. Of course, we could continue to go, just we would have to break through that very tough resistance. And if I had anything else to say, I would take note that it does appear that we do have a bit of a falling wedge here, and that does tend to have a. I'm just taking a look at this really quick as I noticed being zoomed out. We do have this falling wedge, which it doesn't look like it's maxed out the top here. The top is around that 18,200. So even if we do have a pullback, that 18,000, 18,200 area is still realistic. And then we would have to see if we could, break out of that and get uber bullish, or if we just end up breaking down underneath this oh no anyway. Oh wow, these levels really work really, really well with this falling wedge. So glad I noticed this structure. If we do lose that oh no anyway area today, of course these things will change a little bit dynamically over the next couple days, but overall you can eyeball how this wedge might end up working out. If we do lose it, then of course that would take us down fairly significantly. This is a fairly sizable wedge here that we have going on. So if we take a bit of a measured move on this one, I mean, I don't know where we would break out on it, but it could take us into a bullish area, and it could also take us to hell. Okay, so this one suggests that it could break down to 7,000, and it could also break up to 25,000. Now this is a macro perspective. Of course, I'm on the weekly right now, so this could take even a couple weeks to play out, okay, guys? So we are talking about measured moves, and sometimes it can take a couple months before these macro structures play out. But we could be talking about a measured move to $7,000, or a measured move to $25,000. Okay, so just understand it looks like we're in the final stretch of the bearishness of the Bitcoin chart, assuming that you believe that we cannot go below, 10,000, 7,000-ish kind of area. But we do see the possibility of getting us down that low based upon these structures, should we have a breakdown in this wedge. On the other hand, we have the hopium that when this wedge completes, that we could end up popping up above that uber bullish level and having that kind of super bullishness that could end up triggering some type of a run, where I would suggest that we could have the potential to head up even to 28,000 if we do recover above 25,000. Right, if we're able to take out this high, then on a macro perspective, we could end up running to 28 and to even 35,000, and there's the potential to get up to this 40 to 50,000 on some type of a mid-cycle run. I don't know what would be the catalyst for that. maybe some type of settlement in Russia and Ukraine, maybe the Fed taking a break, but not necessarily pivoting, but taking some type of a break, or being really gentle on the markets, but still increasing rates, right? So nothing really has changed. Just the pressure to the downside gets lifted, and boats are able to rise. But from a patterns perspective, this is looking quite interesting. Okay, looking quite interesting. And then if we take a look at the history of Bitcoin, where maybe we have these type of wedges, we can see that. Let me just ignore the exuberance there, right? I mean, I'm just eyeballing this. I'm not trying to be precise. I'm just saying that, we do have a history of us breaking down from these things as we have a history of breaking up, right? So this could be our final capitulation, taking out these CME gaps. Those are purple lines are the CME gaps, taking out the CME gaps on the professional exchanges, and then putting in a bottom structure, which then takes us up perhaps to $28,000, $35,000. And then maybe we have some type of crash, nuclear war, I don't know, whatever, right? Some type of news that they'll justify it to do a double bottom, and then it's probably up only from there after this type of a quarterly backfill. Alternatively, we just spend our time down here, right? Going sideways, maybe just where we are. We don't actually have to have these big moves. We could just go sideways, and that's also a possibility. But I do think these different levels probably would want to be checked. Um, let's see, can we get any? I don't, it's just too small. All right, I think I'm gonna end it there, guys. That is your both a little bit of a doomium and hopium, but hey, again, we're not fortune tellers here. We can only help you navigate your way through these markets. If you want a final look at my different levels there, probably I did take a little bit too long in this episode, but let's go over to the 4 hour, and you can see that we are above the daily neutral now. So, just in the time of recording this video, we have added a little bit to that hopium. And again, solidly bullish above 17,128, bullish above 1785 in general. Better than neutral above 17,051, neutral underneath that, bearish underneath 16,945, and solidly bearish underneath 16,897. That was your alpha for the day. Stay safe. Thank you for being subscribers. Happy trading.